Okay, so RBL Bank just released their financials, right? It's quite a bit to take in, with all these numbers flying around.
Yeah, well, it's a pretty detailed report, but let's break it down a bit. So, their net interest income, or NII, grew by 3% year over year, reaching about 1,585 crore for the quarter.
3%. What about their other income? I mean, that's always something to look at, right?
Absolutely, actually, their other income saw a pretty significant jump. It's up 38% year over year to 1,073 crore. That includes a solid 19% growth in core fees.
Wow, that's quite a leap. So, on the expenses side, how did they manage there?
Well, their operating expenses increased by 7% year over year, reaching about 1,662 crore. But here's the interesting part. Their cost to income ratio improved. It's now at 62.5%, which is better than the 67.1% in the same quarter last year.
Okay, so they're managing costs better while also increasing other income. That's good to hear. But what about the actual profits?
Right. So their operating profit, that's before provisions, was up by 30% year over year, reaching about 997 crore. However, their net profit after taking into account provisions and all was about 33 B roads.
Okay, I see. The net profit is a little low then. What contributed to that?
Actually, the main factor there was an additional provision of 414 crore they made for their joint liability group, or JLG loans. Basically, they're being cautious, increasing coverage on those assets.
That makes sense. So, moving on to their lending, how did their loans perform this quarter?
So their net advances, that's the total loans they've given out, grew by 13% year over year to about 9,412 crore. It's a solid increase there.
Well, 13%, that's pretty solid. Where did they see the most growth?
Well, their retail advances grew quite a bit, up 19% year over year, reaching almost 55,200 crore. And it seems they're really focusing on secured retail, as that grew by a hefty 38%.
Secured retail, yeah, that makes sense. It's safer, right? What about the deposits? How are they doing in that area?
Okay, so total deposits are up 15% year over year to about 1,06,753 crore. Their CASA deposits, which are your current and savings accounts, also grew by 12%.
Okay, good deposit growth. Any highlights within that? I mean, any specific types?
Yeah, actually, their granular deposits, those are deposits less than 3 crore, saw a big jump, up by 20% year over year. And well, they now account for about 50% of their total deposits.
50%, that's a significant portion. So, what does it mean in terms of the overall health of the bank?
Well, it indicates a broad base of smaller depositors, which is generally a good sign for stability. It shows they aren't overly reliant on large corporate accounts and stuff.
Right, diversification is key. And what about their capital? I mean, how well capitalized are they?
Their total capital adequacy ratio, or CAR, including the profits from the first 9 months, is at 15.4%. That's, a bit lower compared to the 16.4% at the end of last year, but still pretty healthy.
That sounds adequate, yeah. What about the other capital ratios? I mean, CET1?
Their common equity tier 1 ratio, or CET1, is at 13.7%, also a bit lower than the 14.6% of the previous year, but it's still within acceptable limits.
Got it. And liquidity? I mean, how are they doing there?
Well, their average liquidity coverage ratio, LCR, was at 143% for the quarter, indicating they have a strong liquidity position.
Okay, that sounds pretty solid. So overall, the bank seems to be doing okay.
Yeah, but let's touch on asset quality too. Their GNPA, or gross non-performing asset ratio, is down by 20 basis points year over year and is now at 2.92%.
That's good. A decrease is definitely a positive sign. And what about net NPAs?
The net NPA ratio is also down by 26 basis points year over year to 0.53%. Both are positive movements, indicating improvements in their asset quality.
Okay, that's great. So despite the additional provisions, their asset quality is improving.
Exactly. And their overall provision coverage ratio, including technical write-offs, is pretty strong at 93.46%. So they're very well covered.
Okay, so overall, a pretty solid performance with some strategic adjustments. What about their distribution network? I mean, how are they expanding that?
Sure. So their total touch points, which include branches, ATMs, and business correspondent branches, now stand at 2011. And they added more business correspondent locations this quarter.
Expanding the reach then. So it's not just numbers on a paper then.
Yeah, it shows a commitment to growing their physical presence alongside, digital offerings. Now, I think it's the right time to ask our listeners to like, share, and subscribe to our YouTube channel. That would really help us.
Definitely. Little support goes a long way. So thank you for mentioning that. But back to the bank. So their credit card business, anything to highlight there?
Yeah, so their credit card business saw a 7% increase in advances, reaching 17,493 crore. And their new account acquisition is up 5% year over year. So it is also growing.
Okay. And what about the spending?
Their spends have also seen a growth. They were at 22,174 crore for the quarter. So, they are also doing well in terms of the card usage.
And I see they also have quite the portfolio of co-branded credit cards.
Yes, they have a very extensive list of co-branded cards, from travel to lifestyle to even ones with fintech partners. It shows, they're focusing on diverse customer segments.
Diversification is definitely key for sustainability, right? So that's good to hear. What about the JLG business? I mean, given the provision they made.
Well, the total loan portfolio of their joint liability group business was 6,532 crore. And as we discussed earlier, the bank proactively made an additional provision of 414 crore to increase coverage on this segment.
So it's a cautious approach to that then, I mean, given the macroeconomic environment.
Exactly. And they're also focusing on improving collection efficiency and reducing the number of accounts in the special mention account category, or SMA.
Got it. Proactive steps in a challenging market. Now, digital banking, it's a big thing these days. How is RBL performing there?
RBL is really scaling up their digital platform with about 9 crore transactions per month. And they've got more than 450 partnerships with corporates and about 34 lakh merchants using their payment solutions.
That's a pretty significant scale, actually. What about their API capabilities?
They've got over 250 APIs provided to partners and about 15 lakh peak daily API calls. So it's a robust digital infrastructure for partnerships and expansion.
Yeah, that's really crucial for modern banking. It's all about integrations these days. Anything on ESG? I mean, environmental and social factors?
Oh, yeah, they've got a very clear focus on ESG. Their policy includes managing their own environmental footprint and the impact of their lending.
And they've got targets, right? I mean, like going carbon neutral.
They actually aim to become carbon neutral in their own operations by 2035 and also cap their exposure to coal-based power, planning to reduce it to zero by 2034.
Okay, that's a serious long-term commitment. So, what about the other aspects of ESG, social and governance?
They have really focused programs on sustainability and financial inclusion and are enhancing financial literacy amongst the rural population. And in addition, the overall women representation in the bank is 25% plus.
That's quite comprehensive. I mean, it's a good strategy to build a sustainable bank.
Yes, it seems they have a very well-rounded approach, integrating sustainability with business practices. They even received a high rating from CRISIL and Refinitiv, in terms of their ESG performance.
That's good to know. Overall, it seems like a lot of work is happening at RBL Bank.
Yeah, it looks like they're really focused on balancing growth with responsible practices. They're definitely playing the long game,
Indeed. So for our listeners, it would be interesting to see how these strategies play out in the coming quarters.
Absolutely. And we should be watching closely how these initiatives translate into bottom line improvements.
Indeed. So for all of our listeners, be sure to tune in to our next discussion as well.
Right. And until next time, stay informed.